You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Monday. It is noon Central. It is 1 p.m. Eastern. Time to commence our broadcast week here on the old Options Insider Radio Network. That means it's time for episode 1 of the old OB, a.k.a. the Option Block, a.k.a. your bi-weekly source for all things options related. My name is Mark Long. I'll be your host, your guide, your maitre d', lead you to your table here on the 1-hour delicious meal that is the Option Block. Remember, if you like what you hear, this, anything else we do throughout the network, keep those reviews, those comments coming. Seems like every month is greater than the last out there. A lot of folks discovering the world of options these days and everything that goes along with it, including our networks. Remember, if you like what you hear, keep those reviews. It does help new folks continue to discover what it is we do over here, which in these crazy times is more important than ever. Of course, keep those comments and keep those questions coming too. We do love to hear from you folks. And speaking of hearing from you, we heard from you last week. You guys missed the 80s theme kickoff. That shows how crazy of a week it was last week. The GameStop thing threw everything off its axis, including us. I completely forgot about the 80s thing. I was so flummoxed by what was going on in GameStop. But guess what, listeners? You have asked for it. Nay, you have demanded for it to return. So without further ado, see, asking you shall receive. Let's kick it off the way we used to, a little bit of the old 80s theme song trivia. All right, there we go. Bit of a sillier one. This was sent in by a listener. I'll get to who that was in a second because his comment kind of gives it away. a little bit. Let's go around the horn. Let's start in the land of Uncle Mike, because it's an Uncle Mike kind of day in more ways than one out there. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, A, welcome back to the program. B, you are our reigning 80s TV theme song champion from last year, so you get first pick. Can you name that somewhat silly but fun tune, sir?
It's tough. I want to say Newhart, but I know it's not Newhart. I don't know. I'm going to take a flyer on this one, but sometimes my flyers have worked, so I'll guess Murder, She Wrote.
All right. Where is your Shazam button? What are you doing over there? Because your flyers are inexorably more accurate than actual guesses. Yes, it is Murder, She Wrote.
Oh, my gosh.
That one came in from, what was the name? Let's see. Chris Bronson, who wrote in and said, just a suggestion for the 80s theme song for next Monday's option block. Murder, She Wrote. Let's see who watched TV with their grandma. So apparently Uncle Mike watched TV with his grandma. And Chris went on to say, love the shows. Keep doing what you do. Well, thank you for that, Chris. Thanks everybody who takes the time to suggest 80s themes amongst other things that you guys suggest. So it sounds like Uncle Mike watched a little TV with his grandma back in the 80s. Let's go now out to deep in the heart of Texas, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Line Capital. Mr. Meatball, welcome back to the program. A and B, did you also watch TV in the 80s with your grandma?
Angela was investigating the murder of short hedge fund and whether she was on that case. So
Melvin Capital, she's on the case.
She's on the case of who murdered Melvin Capital.
Yes. She has, a few 100,000, perhaps a few million suspects on that front. As we keep on rolling right on into our first segment, it is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading out there. You know, it's another weird one on the street. You know, we were talking about sell-offs and rallies last week. Now we're back on the rally tip. Most of the major indices out there feeling a bit of the old green on the screen. S&P up a full 1.6% coming into showtime. NASDAQ up 2.5%. And the Dow up about 0.8%. So they're giving, they're taking away, they're giving, they're taking away every day out there. Today, once again, they are in a giving mood out there. Coming to showtime, VIX was close to a 30 handle, right around a 30 handle, up about 2.25. It's about 29.75 now. So that puts it up about exactly 2 handles from where it was this time last show. And then good old VVIX, pretty frothy, 132.5 coming into showtime, puts it up 11.5 handles from our last show. Remember, you like to watch that 120 level out there. VVIX saying, nope, we're way past that now, 132 and change. And good old VXX, a.k.a. the product that you guys love to fade. Remember, we talked about it breaking through the 20 handle last week. It did that. Coming at showtime, it was close to the 20 handle again. Kind of just broke through it again to the dark side. So it's just at about a little bit shy of 20 right now. Was at about 20.25. It puts it up about almost a full point from where it was about a week ago, and then now it's a little bit shy of 20 handles, up about 0.75 of a point, but still shy of that 20 handle. A lot of folks have been watching, and of course, VolQ, aka the at the money vol of the NASDAQ 100, was at about a 28.75. Not that long before the show, puts it up about 0.75 of a point. Now coming at showtime, a little bit shy of the 28 handle, about 27.90, which puts it pretty much about in line with where it was this time last show. So a lot to unpack. We got to start in Uncle Mike land. A, because it's a green on the screen day, which means it's an Uncle Mike type of day. And B, last week I was doing our TWIFO program talking about all things CME, and we were talking to our buddy Matt over there in Oratz Land. He was talking about how the online chatter seemed like it was starting to turn towards all things silver. So we profiled some of the interesting options activity going up over there on CME last week. Sure enough, lo and behold, there was pretty much a preponderance of near-term out-of-the-money calls going up in the options on silver futures. And as the weekend progressed, it seems like all the online chatter turned towards Uncle Mike's favorite shiny metal out there, which is silver. So Uncle Mike, it's a double Uncle Mike kind of day. Actually, triple if you count your victory earlier in the 80s theme guessing game. So break it down. What's like every tape on this day of A, upside in the markets, and B, Everyone's fixated on your favorite shiny metal, silver, sir.
It's something else for sure. So right now, the silver's the big talk of the day, I think, right now. I want to use an analogy as to what's happening in silver. So first off, for the Reddit people and the millennials out there, or whoever are the ones that made their money on GameStop and they beat the short sellers in GameStop, my hat's off to you. I have if this was the millennials, I have a renewed bit of confidence in the millennial generation, if indeed it was them that actually did it. So I think that is very good. Make sure you get out and take profits, because this is not going to last. When it's going to end, who knows? But this is not going to last. So make sure that you manage your risk and get out and do what you have to do if you've made money in the GameStop short squeeze. Silver's different. With the short sellers, margin calls are not pleasant for them. They have to do other things. They have to deal with it. They have to well, margin calls aren't pleasant for anybody, but they have to liquidate other things. They have to do this, that, and the other. But that's Wall Street. When you mess with silver, you're messing with LaSalle Street. And this is kind of the derivative gang that they kind of know what they're doing when it comes to stuff like this. And so it's different than GameStop. And if you get caught holding the bag too long in GameStop, it's not going to end well, no question. But silver, I really don't see this going on based solely on a short squeeze. Now, if this does trigger more buyers and more excitement for silver because maybe it's trailed gold or something like that, then yes, it could go on. But in terms of trying to squeeze out the shorts, I think this is the equivalent of when a police officer looks to arrest you and you say, oh, you're not going to catch me, and you try to outrun him on the highway. All that does is just makes the police officer smile and say, all right, game on. And he calls his buddies, and eventually the person gets caught. You end up on the some type of online video chase of some sort. But the point is that you're not going to win. So just to kind of give you an idea of the volume that's involved in silver, silver is much bigger than GameStop in that if you do one futures, the big futures contract for silver, let's say that silver, and I'm not talking about SLV, I'm talking about the big contract, the big futures contract. If you do a one lot, let's just assume silver is being priced at $29 per troy ounce. You own, and let's say you're long, you own roughly $145,000 worth of silver. That's much bigger than one share of GameStop at $300 or $200 or whatever the heck it is right now. Now, to give you an idea of that, I just looked at some average volumes for silver, and this was before Friday. This was earlier last week for the big contract. It was roughly 76,000 on some just random days that I was looking at. So that's actually, you're trading over $11 billion worth of silver a day on days that before the big squeeze went on, so to speak. Now, granted, I believe it was like over 200,000 last I looked for Friday, and I haven't even looked at today. But my point is that if you look at that compared to GameStop at its peak, it's going to be an average day for silver. It was like GameStop at its peak in terms of the volume that's actually traded. Now, with that being said, most people who own silver, the futures contract, have it on some type of margin anyway. And so because of that, most people that actually own the silver futures contract aren't shelling out $145,000 to buy it. They're paying much less for it in terms of the margin maintenance requirement in the futures world. So they have plans in place, and they typically have plans in place to where if it goes a little bit against you, they're going to manage risk and buy calls or buy puts, depending if they're long or short, do this, that, or the other. It's a very systematic thing with what they're going to be doing. And so if you're trying to squeeze people in the silver world, it's likely not going to work. There's a history lesson in this. The Hunt brothers in the late 70s, early 80s. Now, not many people in the option world know that the Hunt brothers are actually related to Lamar Hunt, who was basically the founder of the AFC. So when the Chiefs won the AFC last week, they got the Lamar Hunt Trophy, and Lamar Hunt was a longtime owner of the Kansas City Chiefs. Not many people in the football world know that him and his brothers tried to corner the silver market in the late 70s, early 80s. They couldn't do it with billions and billions and billions of dollars in 1979, 1980 money. And they about cornered the whole market. So with that, I don't think that it's going to end well if you're a retail trader trying to buy some SLV and, yep, hey, great, it's up today, but you're not going to get a similar result from GameStop. Now, don't get me wrong. I hope I'm wrong, because I have some clients that have some long deltas in SLV right now. So I hope I am dead wrong. But in terms of the movement that GameStop got, I really don't see silver getting that type of movement. The last time we had a big rally in silver was roughly about 8 or 9 years ago, and I talked about on this show quite a bit. We had a lot of holdings at the time. We still have holdings in silver, but not near as much as we had back then. But that was for different reasons. And what's unique about silver is it oftentimes does rally like a thief in the night. It'll bore you to death and not do anything for years and years and years. And all of a sudden it'll shoot up. So whether this is the time it does that, who knows? But I really don't see this having the same type of a result, at least in the near term, as GameStop did. In terms of the rest of the marketplace, I think we're just kind of having a little bit of a relief rally in that we've went to our levels to where markets went negative on the year on Friday. And so they're back to being positive again today, up roughly 1.69% as I'm looking at my screen right now. And I'm referring to the S&P 500, of course. And so I think it's kind of a little bit of a relief rally. One thing that I'm personally happy about now is that what's tough for me in my aggressive trading strategy is oftentimes if we go negative on the year, I have to get out of a lot of my positioning, which I got out of a decent amount of it on Friday. But what I modified in my rule for this year, just to kind of give you guys an update on the strategy block I did from a few weeks ago, is that I have a longer term out of the money put spread to prevent me from getting chopped on days like Friday to today. So this is definitely an Uncle Mike type of day because of the fact that I held into my far out of the money put spread. Not too far out of the money, but I went with it a little bit of a longer term time frame, so that way the gamma wouldn't punish me so bad. So anyway, that is what's going on in my world, and I will end with hi-ho silver.
Yes, everyone out there is becoming a junior Hunt brother these days. Really quickly, before we get off silver, have you made any adjustments to the epic drama, the saga that is the 2-year silver collar as a result of this quote-unquote short squeeze in silver, sir?
I've been out of the 2-year silver collar for a while now. Where I'm at right now is I'm roughly, I'll say, between 8 and 14 months without revealing my true positions, so I can keep my compliance people happy. But the positioning with which I'm in right now, I do have some clients that are just long the underlying, and then I also have a longer term put spread to where I'm looking to buy silver if it dips, and then and I also have a longer term out of the money call spread where I'm looking to participate in upside if we do have a major rally. So it's kind of like I would refer to it as like a hedged risk reversal that I'm in right now, but it's a little bit too far out to really do anything with it. I looked at earlier today, and then just with vol numbers doing what they're doing with silver, the volatility doing what it's doing with the silver options, there was really no opportunity for an adjustment. But if we rally a little bit more, I might be able to close out the short put spread for a profit and then just basically sit on a nearly free call spread because the put spread would have financed it at that time.
There we go. The saga of the 2-year silver collar has drawn to an ignominious close. I thought it was still going. So there we go. We all learned something today, listeners. Let's head back down now. Deep in the heart of Texas is more crude oil territory than silver territory down there. But nonetheless, he's been working hard behind the scenes there, plumbing the depths of the Robin Hood retail trading phenomenon. Mr. Meatball, sir, what has been lighting up your tape in the land of the pit as we've moved from GameStop to AMC and now into silver, sir?
Yeah, the silver thing is different because best I can tell, that did not really come from that Wall Street Bets area. It seems to be something that was kind of pushed on Twitter and definitely caused some movement. But, I would remind people that right now the most crowded trade out there next to GameStop is probably its short U.S. dollar. And at some point, that's going to unwind, and the dollar is going to get a nice rally. Well, let's talk about silver and how it relates to movement in the U.S. dollar. Folks, quiz. When the dollar gets a rip-roaring rally, what happens to precious metals? They fall. And so I think that this is a complete setup, and I would not be on board with it. I don't know. I agree with Mike. I don't think it's going to go anywhere. It's a way bigger market. All these little individual markets are way bigger than what you see in something like silver. Now, if they really want to get creative, I'm a little disappointed they didn't go after, imitation cheese dairy products that trade on the Merck that the American cheese contract that trades on the CME, because that's a trade you could really push around, the cost of milk. But
I thought you were about to say that's a trade you could really sink your teeth into. I would have gone with that one.
Oh, yeah. Well, you can sink your teeth into it if you're making a grilled cheese sandwich. And you can also sink your teeth into it if you want to affect the price of milk, because they use the cheese contract to basically manipulate milk pricing. But I think that the silver thing is kind of a made up. There may be some fundamental squeeziness out there, but I don't know that it's from Reddit. Same rumor was going around about VIX, but those seem to be created on Twitter and not by, phony people, not by Wall Street Bets. I think the Wall Street Bets crowd is still kind of concentrating on some of these names. And, I got to be honest, I'm watching GameStop, and the borrow is starting to come off. And as the borrow comes off, which means it's easier to short, that thing is in for an epic kneecapping. And it could be pretty ugly. AMC, not quite as bad. At least they're smart in doing something with it by selling some stock. I don't understand why GameStop hasn't already come out and said we're going to sell, $2.5 billion.
That's driving me crazy. They got handed a gift to save their company, and they're not taking it. That they should be issuing billions of dollars worth of stock right now.
I mean, AMC did the right thing, right? Hey, we're gonna sell several $100 million worth of stock. Great, good job. Nokia, which has also had a nice rally, doesn't really need the money. It's actually a big company, but there are all these little baby names that are flying all over the place. Sundial, SNDL. You've got just a whole host of names. But yeah, I don't understand why GameStop hasn't unloaded a bunch of equity to, that's enough money to overhaul the whole company over a 1 year period. I mean, I don't know. I don't remember what their operating, what their operating revenue is, but they could get a year or two worth of revenue and really overhaul their business the way they're talking to it if they would step in and sell some calls. And then when it finally gets back down to $4, I'd want to buy some because, it could live.
Yeah, that's been the biggest question mark. All this, it must be some behind the scenes covenants that are prohibiting it. Otherwise, they're getting a huge gift horse, and they're just letting it ride right by them. Because you're right. Otherwise, they are. I mean, there were a stock that was trading $4 a year ago. They got to $20 almost at the beginning of this year. Most people thought at that point it was already overvalued. Now 500 or wherever it is now 300. It's clearly beyond all sense of reason. But take advantage of it. Issue some shares. That would, of course, put more float out there and probably crush the massive squeeze. So maybe the Redditors don't want that. But from a company perspective, you got to look forward to the health of your company. If they're giving you billions of dollars to save your company, you have to take it. Speaking of taking it, let's see what the markets are taking out there right now. A pretty active day on the street. Listeners, VIX putting up some numbers right now, a little bit north of 500,000 contracts as of a few minutes ago. The ADV, 606,000. So VIX looking like it's on course to break through its ADV yet again. SPY at about 2.75 million contracts right now. The ADV, a little bit north of 4, about 4.2 million contracts. The S, 784,000 contracts on the tape right now. The ADV ticking up to 1.2 million. So the S, finally, ticking up there a little bit. The Q's, 555,000 contracts on the tape. The ADV just a tick north of 1 million. And IWM, so the small cap lens out there, 315,000. The ADV, 762. Let's get up to the top 10 most active single names out there because there's some interesting stuff afoot out there right now. Listen, outside of your games and your AMCs and your silvers and everything else, cost you right now 322,000 contracts to break into the top 10. If you know anything about our top 10 listers, you know that's a pretty decent amount of paper to break into the top 10. Usually it could be $1.50, $1.40, some light days. 322 today. That gets you all the way to Microsoft. They're number 9. Guess what number 9 is? Yes, the aforementioned game. 420,000, a paltry, a meager 420,000 contracts on the tape right now in GameStop. Number 8, Neo. So it's back up there. Number 8, 424,000. Number 7. This is the DuPont here. Yeah, DuPont, they've done some deals now that have added to their nomenclature. But yeah, DuPont here, number 7, 462,000 contracts on the tape. That stock's taking a bit of a hit today, off about 8%, trading around $73 right now. It's completing that's just a division completing a merger, but still, yeah, interesting stuff afoot here. DuPont, don't see them on the top 10 too often. Number 7, now we're going out. Interesting how we're seeing, this is a nice sign of earnings season, maybe spreading the wealth a little bit, getting some other names we don't usually talk about here, including Sundial back on the top 10 here. I'm talking about them in a while. They're good for 567,000 contracts. So we're ticking up now, listen. Now we're getting into the over 500,000 category. Number 5, yes, number 5, Tesla, 595,000. What could possibly supplant Tesla? Let's see. Number 4, our old friend AMC, 621,000 contracts. So AMC supplanting GameStop in terms of options paper today. Number 3, another offender on that list we've been talking about a little bit of late. Good old Nokia. Or Nokia, I think as some folks pronounce it overseas. Either way, good for 645,000 contracts. Number 2, this one surprised me, and this is just a recent phenomenon. It happened almost, I think, since the show launched. Ford, sleepy old Ford, blowing through 776,000 contracts. I saw that. I said, whoa, did they pre-announce their earnings? I know they're coming up for earnings later this week, so I just pulled it up, and it looks like they just announced a new 6-year partnership with Google to replace all that horrible Microsoft Sync garbage they have in their head units in the car. So you go to Android Auto, it sounds like, and that really boosted the stock there for a while. It sounds like the options too. The stock went from about $10.50 all the way to $11.30. It's given a lot of that back now. It's down to about $10.95, and that was good for 776,000 contracts. So once again, sleepy old school Ford knocking on the door of the number 1 spot in the most active options. You know who's holding the crown still, though, today. That number 1 spot firmly entrenched over there at Apple right now. 1.12 million contracts on the tape. Yes, crazy times, listeners. Ford peaking at the top spot here pretty much and supplanting Tesla along with Nokia and AMC. That's the kind of day we're having out there. Now let's see what kind of day our Eye of Sauron is having as we unleash it and head on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Let's get weird. Let's get wild. Let's actually put on the old Wayback Pants because we're hopping into the Wayback Machine again. Mr. Meatball, your compadre there, the Rock Lobster, is always asking me to go back and review some of these names that we've talked about. So we have an enormous multi-page list of trades to review. So what do you say we burn through a few of those now and get that backlog a little lighter, Mr. Meatball? You down for that?
I'm down for that. There's nothing I love more than trade review odd blocks.
Unless it's talking GameStop, of course.
Well, GameStop, Sundial, failing movie theater companies, all them.
It is amazing the environment we're in now, where the crappier the outlook for the name, the more it's rallying, baby. That's it. It's off to the races. It's kind of like the opposite of the .com days where, is it tech? It's rallying. These days, is it crappy and heavily shorted? Yes. Okay, it's rallying. That's where we are today. But let's see where our Eye of Sauron finds us. First, we're going to dial our Wayback Machine dial, listeners, all the way back till a year ago. Last year, anyway. It was December 21st. Oh, the heady days of December. It seems like a million years ago. December 21st, we profiled our old friend Stone Cold. Well, that's what we call it. It's actually Stone Co. Ticker symbol STNE. This is actually a Brazilian name. I believe it's an ADR. But either way, we talked. This has been a frequent offender in our odd block of late. And the last time we talked about it was back on December 21st. We profiled what looked like a few pretty aggressive overwrites for decent size out there in January. In particular, someone came in that morning to blast out nearly 12,878 of the Jan pars, the Jan 100 calls for 63 cents. That was pretty much crushing the bid, even though these things were disgustingly wide. They were 60 cents at $1. The stock was near $85 when that trade went up. And then about a couple hours later, we also noted someone coming for the 105s as well, going up 7,200 times for 45 cents, that time on the bid. Again, that was, that stock was about $85. Again, if you're wondering, those were 53 vol for both of those. 51 for the first one, 53 for the second one. We kept an eye on these. There were no earnings in this cycle. The next earnings announcement for Stone Cold is on March 1st. So it looks like someone just trying to get a little bit of the old premium there. And if deciding if if it does rally to that upside, maybe they let some of their underlying go. And at least from an options perspective, this trade worked out. If they're holding on to the stock, they're probably a little bit sad at this point. But we just look at the options here. On the options front, looks like these trades worked out. The stock on expiration in January closed at 78.23, so well below the par and 05 strikes there. Looks like both of these trades were still open pretty much for size at expiration. So that looks like all the hallmarks of an upside overwrite. So you add those two together, which we will. Why not? Let's put them both together. The first trade made a little over 800 grand, and the second one about 325,000. So you're talking about 1.1 million there if you put those both together. Not bad for a few hours work, Mr. Meatball, and maybe it takes some of the sting off of however much he lost on the stock. Is that your takeaway as well? By the way, right now, stock listeners are stock trading $74.06. So about $10, a little more than that, almost $11 now, actually, south of where it was when these trades went up. So Mr. Meatball looks like he won on the options leg, though. If he has a stock leg, perhaps he's not smiling, Mr. Meatball.
Yeah, I'll be interested to see whether he does more call selling to produce some primo. But yeah, kind of feels like a classic overwrite strategy. I'm surprised he hasn't come back for more after doing so well on these sales.
Yeah, Stone Cold was a frequent offender for us for a little while. Someone had an axe to grind out there aggressively. They were blasting away at a lot of premium. This was just the latest incarnation of it that we profiled. But you're right, we haven't seen a ton of activity. Again, we haven't been monitoring it daily, so maybe in between some of our shows, someone has snuck in for some size Stone Cold. Hey, you're right. Given his aggressiveness, it would be surprising. Maybe we'll have to go dig in and see if he's been up to some other, I wouldn't say no good, but some other activity out there since our last turn. So far, it looks like we're 1 for 1 on the options side, on the trade side, even though probably if there's a stock leg, and there probably was, he probably isn't smiling. So we'll put that one kind of a question mark. But from an options perspective, probably a winner. All right, MLCO, ticker symbol MLCO. This is MLCO Resorts Limited. This one, let's see, at the time, this goes back to December 14th now, so going back a little bit earlier. Going out to one of the Rock Lobster's favorite strategies. Looked like it was one of his favorites, the line in the sand puts strategy at the time. Someone putting up 5,500 of the Jan 16 puts for 26 cents. That was pretty much right on the bid. These are pretty wide as well. That's nearly a 50 vol, a 47 vol out there. The stock was at the time of this trade $18.10. So these were about $2 out of the money, these puts. And the stock dropped post this trade, but not enough to make it count. It closed at $16.43 on expiration. So once again, looks like these puts expired worthless, and these trades still open on expiration. Looks like paper pocketed, not a ton, 143,000. And we will note, though, this guy looks like he had decent timing, because if he had put this trade on for one more week, the stock broke through 16 not that long after this trade went off the board. So he had pretty good timing. He got his 26 cents. He got his $143,000. He got the heck out of Dodge, because the next week it broke through. And as of right now, it's still through it. It's $15.60 and 78 cents, even though it looks like this morning it rallied earlier and got a little bit north of 16 handle. So MLCO still struggling with that 16 handle right now, but our friend got his $1.43, Mr. Meatball, and it seems like he got the heck out of Dodge. Is that your takeaway as well, sir?
Well, I believe that the business of selling vacations to people that work at Melvin Capital for MLCO.
Yes. Very specialized business.
It's a very specialized business. It was doing great until, 2 weeks ago. And that's why I believe it dropped. No, it sounds like a well-timed put sale and, hats off. Nice work. Has not come back to trade anymore. So must have decided that conditions have changed and he or she no longer wants to own that line in the sand.
Indeed. Let's see if we can make it 3 for 3 here on our odd block review palooza. This time we're staying on December 14th. So we had a couple interesting trades that day. This time we're going out to Wes, a.k.a. Western Midstream, ticker symbol WES. This is a nat gas liquids company. And at the time we profiled nearly 4,900 of the Jan 13 puts going up through the offer for 60 cents. This is a 73 vol. So pretty juicy. But if you know anything about nat gas, nat gas is pretty juicy right now. So perhaps not surprising there. The stock at the time was about $14.45. It looks like someone really had to have these Jan 13 puts. There are earnings in this name, but not during this cycle. This is in February. So this is not an earnings hedge out here. And it looks like this guy was all hot and bothered for nothing because the stock pretty much drifted north ever since that trade closed at $16.54 on Jan expiration. And there were about 10,000 of these bad boys open on expiration. It seems like paper actually came back in after our trade on December 28th and doubled down on this one, picked up another almost 5,000. So again, putting about almost 10,000 open on this strike for a similar price, which is kind of interesting. They kind of held their value a little bit. He put them on for around 50 odd cents again. So he put these on for 60 and then for 52, 53 for the next doubling. So if you add those two together, looks like our friend or whoever was inspired by him to trade it a second time wasted a fair amount, about $500,000, about 300,000 on the first chunk and about a little over 200,000 on the second chunk. So it seems like our premium selling strategies worked out all right. But this time, our friend who really had to have some puts in West doesn't look like it worked out, Mr. Meatball.
Seems that way. But, if he's long the stock, he probably doesn't care. He probably had some very specific reasons to do it. And I'm sure he doesn't care.
There you go. I think you're going through a dead zone, sir. We lost most of that, but we'll get the gist of it in post as we keep on rolling. It is Monday. It is time to unleash Uncle Mike. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right. It is Monday. Time for Uncle Mike to hold court. Uncle Mike, sir, the floor is yours. Are you going to go back to the land of super squeeziness, a.k.a. silver? You got something else on the brain today, sir?
No, I think I talked enough about silver earlier in the trading block. But what I wanted to do today is that this is just something that a lot of people are asking me about lately is how can you get yield in an environment today and the market is rather volatile? Well, some things that I've been doing and some things that are kind of in my trading lab, so to speak, of things I'm looking into doing at this point is selling premium on bonds.
Trading lab. I like that. I want to go to the Uncle Mike trading lab. Can I go there? They wear lab coats. So how does this work? Goggles?
Well, you have to be a St. Charles resident to be admitted. But since you're the option block host and you're like a cult hero here in our town, I might be able to let you in someday.
I do want to come check out this place. Sounds cool. The Uncle Mike option trading lab.
Yes, there's a lot of ideas in there, that's for sure. But one thing that I have been doing with real money for a while now is selling covered calls on IEF. And so I can't really give you the exact strike prices and expirations of what I'm doing it with. But what IEF is it's a U.S. government. It's an ETF, and it buys 7 to 10 year U.S. government treasuries. And so what that is that it's kind of similar to trading the 10-year note in that you're not quite getting all 10-year notes in there. You're getting some a little bit shorter term duration bonds, but you're able to get that. Now, does that mean that it can't move and that it won't go to zero or that type of thing? No, not at all. You have to understand that there's going to be movement in anything with which you trade, including government bonds. But in terms of the safety factor of what exists within the 10-year note, not many people feel it's much of a default risk. Because let's be honest, if the 10-year note goes belly up, then the least of our problems is our trading accounts, quite frankly. But with that in mind, let's say that you want to have yield and you want to own bonds. Well, you can do it. I mean, there's definitely municipal bonds out there here and there, depending on what state you're in. And since I have clients in different states, I do have some exposure to some various municipal bonds. Not a ton, though. I'm personally not a big fan of corporates right now. I think that they could have a place in a portfolio, but if you are going to use corporate bonds, make sure that you can be very nimble with it and that you can just get out rather quickly in case something goes awry. I'll reference, if you want to see a reference of why, LQD is an ETF that trades corporate bonds. Look at a chart of that during the spring of last year, and you can see how quickly corporate bonds can move. Now, not that that's necessarily bad because it did come back, but typically when people are looking to invest in bonds, they want something a little bit more stable than that. So what I've been doing is IEF, it does have some movement to it, but by selling covered calls against it, number one, the yield itself on IEF, you're getting a whopping 0.8% about 0.8, 0.9%, just depending on where the yield is at that time. So that's really not that exciting. But if you actually have the ability to sell some premium on it, what you're doing is you're creating income on something with the risk of U.S. government treasuries. Of course, the risk of the fund itself shutting down and going belly up, I suppose. But in reality, you're getting pretty darn close to U.S. government treasury risk. So I'm just kind of looking at this, and the spreads on the bid-ask spreads are not the most friendly all the time, but this is becoming more and more popular. So, for example, let's say that you wanted to go out to I'll just randomly pick one here. Let's say you went out to March. Full disclosure, I am not in any March premium for this, but let's just say that you went out to March, 46 days, and IEF's currently trading at 118.69. So let's say that you were to sell the March 119 calls slightly out of the money. Well, you can get roughly 75 cents for those, just depending on where you get filled. So in doing the math on that, let's say that you're able to get that every other month, then that's approximately, that can get your yield up to a little over 4% annualized. Now, of course, you have the risk of it going down, but once again, this is a U.S. government bond to where you're going to have not as much volatility typically, but if you can have the risk of a U.S. government treasury, but then still have a yield of between 4 and 5%, that seems like a pretty decent deal to me. And that's why I like that trade right now. Now, is there going to be a time when this doesn't work? Yes, of course. But understand that that's why it's important to be nimble in everything with which you're doing. So with that, that's something that I'm doing right now. And you can go 1 month, 2 months, 6 months, or whatever you feel like. But with this, I want to kind of emphasize as well that volume on these is not pleasant. This is something to where you sell the covered call and you either let it wait till expiration or you put an all or none limit order to get out at a certain price, whatever you want to get out at. But don't plan on being able to trade these very frequently. This is definitely a set it and forget it style of trade for the time frame with which you're in. So that is what's going on in Uncle Mike land, and I will turn it back to you, Mark.
All right, and I will be generous and turn it over to our listeners. It is time for a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the mail block. You guys have thoughts. Let's get to those. We actually turned the spotlight on you guys last week on some of these controversial topics of our day right now. We asked you last week, we've seen many major brokerage firms banning opening transactions in GameStop and other heavily shorted names. Are they doing the right thing? Gave you 3 choices. Well, actually 4 if you count the other. So yes, they're doing the right thing to protect themselves. Yes, they're doing the right things to protect customers. No, it's my money, my rules, and other. You guys had some thoughts on other as well. As you might imagine, most of you, 74.6% of you, said, nope, it's my money, my rules. How dare you limit my opening transactions? Nearly 18%, 17.9% said, yes, the brokers are doing the right thing to protect themselves. Yes, they're doing the right thing to protect customers, 6.3%, and other, only about 1.2% of you. But you had some thoughts out there, like Surf City said it's only the right thing to do if you consider protecting hedge funds the right thing, obviously reflecting that pretty widely held opinion out there among certain areas that all of this was done at the inclination and to benefit, the Citadels and the Melvins and everyone else out there. MK Investments chiming in. So, on one thing I agree on with the Wall Street Bets folks, this crime where the market is closed so banks can change price and then reopen should be gone one day. So it sounds like he wants the old 24-hour trading cycle for some of these names. And then Charles Schwab chimed in on our poll as well to say neither Charles Schwab nor TD Ameritrade halted the buying or selling on any stocks this week. We did adjust margin requirements to ensure clients had sufficient assets to pay for stock purchases and restricted certain advanced option strategies. And they linked to a document that detailed what those strategies were. We know a lot of you had issues opening new strategies, so they lump a lot into that quote-unquote advanced option strategy category, including basic verticals in names like whatever, AMC, Pick'em, Game, whenever, pick your name out there. People had trouble, and those were prohibited from opening those as well. So it got a little bit beyond what Schwab said here, and obviously the definition of advanced is open to interpretation. Some of our listeners wanted to be able to trade calendars. That could probably fall under the advanced. I would think Schwab said no to that and a lot of other things. But check out their link they sent for what they term as their clarification. Either way, there were clearly some messaging problems around this, not least of which from Robinhood. Their CEO had to do the dance on the media last week, and it didn't really work out too well for them. Schwab, same thing. A hard time for them really messaging accurately what the hell was actually going on their platform. We also asked you guys around this movement, the whole frenzy around GameStop. A lot of people view this as a pretty significant event. Some people are actually saying out of the money calls going forward should be priced structurally higher to account for these potential eruptions in these names. We asked you guys if you agree, and about 74% of you said, nope, this is the joke. 16.5% saying, yes, this changes everything. And almost 10%, 9.7% saying, what the heck is happening? I'm with you, the latter portion of you out there. So a lot to unpack there. Let's go around the horn. Maybe Uncle Mike, if you have any thoughts on these polls. Also, we have a question for you, so you can answer this as well. This comes from J3 Dingle, one of our regular listeners. He says, maybe Uncle Mike's 80-plus trade makes sense when one considers the expected value of YOLO, a.k.a. you only live once. So if you can clarify for us what he's talking about with your 80-plus trade, have at it, sir. And then, B, do you have any thoughts on these the results of these crazy polls, sir?
In terms of the 80-plus trade, I'm guessing that means that whenever I'm short an option or a spread and I can make 80% of the premium taken in, I close it out. That's the only thing that I could see on that. So, yeah, I would say that if you are short premium on any of these YOLO stocks, then maybe in that instance, you may want to get out before you get 80% of it. I don't know, but I'm not in any of them, so I really can't comment on that. In terms of the polls, the Viceroy often said on margin rules are there to protect the broker. That's why they exist. That's why they have margin calls. They're there to protect the broker. So if I'm Robinhood and I felt that I wasn't able to handle all the order flow, then I probably would have done the same thing. But
Mr. Uncle Mike, are you back? We lost you for a second. You there?
I'm here. Can you hear me?
Yeah, go back like 1 minute, please, if you can.
Okay, so in terms of my 80 trade rule, that's in reference, I'm guessing, to when as soon as you sell premium, whether it has to do with a spread or with just a short put or short call, typically when I can take away 80% of the premium sold, I close the trade. And since I'm not short any premium on GameStop or any of these YOLOs, then haven't had to be concerned with it, thankfully. In terms of the margin rules or halting trade, the Viceroy often would say on this show that those rules are put in place to protect the broker, and that's who they're put in place for. And I would agree. So granted, with Robinhood, if they don't have the funds to handle all those trades and opening and closing transactions, then I probably would have done the same thing if I were them. But thankfully, at St. Charles Wealth Management and AKA RCM Wealth Advisors, we use brokers that can handle things like that. So we didn't have that issue, but we weren't trading any of those names anyway. So it wouldn't have been an issue. But if we wanted to, we definitely could have handled all the business with that. I think that is this some political conspiracy to close down trading in those? I don't think it's that. I just think it's the brokers trying to protect themselves along those lines. So that's my take on it.
There you go, Uncle Mike. And we got Mr. Meatball. Sir, if you have any thoughts on these crazy, fun, interesting polls on these crazy times here, including our audience saying the brokers should lay off their accounts, A, and then B, saying this trend of GameStop shouldn't result in more expensive out-of-the-money calls, even though covered call writers out there may object. And then C, we have Yuka listening to the show. We were debating earlier, you and I, about why isn't GameStop issuing billions of dollars of new stock to take advantage of this. Yuka says they're possibly doing it to avoid being audited or sued for taking advantage of a manipulated, I think he means thread, in a stock price. The SEC is out there, and he put a bunch of eyeballs out there. So what are your thoughts on any of that, Mr. Meatball?
Well, I think that one of the things people need to realize is that if we wanted to fix anything, I think it's time for the T+3 rule to go away with stock, right? I mean, why is it that options can sell the next day?
Amen.
But they can't settle stock?
Yeah, that'd be a nice outcome of this.
The reason why Robinhood got in so much trouble and got so many margining issues is because they were short 1 million shares that hadn't settled and long 1 million shares that hadn't settled, or really short like a lot of shares that hadn't settled and long a lot of shares that hadn't settled. Now, they match up on the risk book, but the NSCC, who is the stock equivalent of the OCC, basically sent them a bill saying, hey, you need to put up $4 billion in margin. And so that is why they were forced to take a lot of these steps. And, you know, the number one thing that needs to be fixed is step in there and get rid of this ridiculous, ludicrous, ridiculous T+3 rule. There's no reason for it. It's basically just free money for the clearing corps. That's it. Because they're just sitting there laying on the float, right? And so that's what it comes down to.
Yeah, I think that's going to be an outcome of this, definitely. Just the notion, we see how antiquated stock settlement is. That's effectively what all this was, listeners, exposing the antiquated underbelly of the stock settlement. I know it's cool to go out there and talk about conspiracy theories because it's fun and it makes life a lot more exciting to think that someone's behind the scenes pulling the strings on all this. But at the end of the day, antiquated stock borrow and stock margin and stock settlement, all of that is really to blame for a lot of this. As we keep on rolling to our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we break down what we're keeping an eye on. There's a lot going on this week until our next episode on Thursday, so a lot to unpack. Let's go out to the Meatball. Mr. Meatball, sir, what are you keeping an eye on? We got AMC, we got GameStop, we got Silver. It's so busy we haven't even talked VIX. What is on your radar until our next episode, sir?
We have a ton of news hitting this week. A lot of economic reports, a lot of earnings, ton of earnings, and vol is really, really pricey, really expensive, and you got to wonder how long that's going to last. Because to me, it seems a little bit overjuiced. So those are the pieces I'm watching. What's going to kind of happen with VIX and volatility, what's going to happen with a whole host of things that I think are pretty fascinating to me. And that's what is on my screen and what I'm watching out for.
There you go. Uncle Mike, same question for you, sir. What is on your screen for the rest of this week until we can gather here together on Thursday?
Like Mark, watching the economic reports. I believe we have non-farm this week. Wanting to see that, seeing if we bounce back off of the open of the year, which is where we're positive on the year now in the S&P 500. So watching that also, and then we forgot to mention that we do have a global pandemic out there. Watching to see if vaccines can continue to make news and not be overshadowed by GameStop and silver.
All right, everybody. That music means we've come to the end of this journey. If you want your journey to extend, though, listeners, don't worry. We got you covered. If you're listening live, we'll be back in exactly an hour to break down all the madness going on in the world of crypto derivatives. Spoiler alert, I think this short squeeze phenomenon is limited only to these assets we're talking about. Nope. It's extending far and wide. We've seen little scatines, as we say in Italian, names like XRP getting bid out of like craziness. We've seen a lot of big movement, obviously a lot of vol in Bitcoin land as well as ETH and everything else. We'll break it all down with the folks from Crypto Patterns coming up there in about an hour. If you listen live, we'll pump some fun stuff into the chat there for you in the interim, and we'll be back in exactly an hour to do all that. But before we go, let's go back around the horn. Let's start with the land of the meatball. Mr. Meatball, sounds like the folks over there at the Journal took a liking to your Robinhood service this weekend, sir. If folks want to follow suit and check it out for themselves, where should they go? What should they do?
Go to optionpit.com and just give us your name and email, and we'll gladly start sending you all the amazing information we have on VIX, all the information we have where I, over the weekend, kind of laid out how news reading algorithms are affecting things like GameStop and AMC. And really big money is making a ton on all of this volatility. And so you're going to want to be involved with those. And then you can find out everything you need to know about the Robinhood trader, formerly Little John, that is now, absolutely rolling out new trade ideas almost on an hourly basis.
Oh, it's not Little John anymore? It's Robinhood Trader now?
Yes, we've rebranded it the Robinhood Trader.
Oh, well, there you go. Check out the Robinhood Trader over there at Option Pits. A timely one, if ever there was one. Uncle Mike, sir, sounds like things are rolling over there in the land of the Uncle Mike St. Charles Wealth Trading Lab. If folks want to reach out and see what's breaking ground, what's new, what's the eureka moment in the trading lab, where should they go? What should they do?
stcharleswealth.com for more information. Feel free to reach out if you are looking for a financial advisor who's not afraid of the option product.
There you go. stcharleswealth.com is the place to go. And on behalf of the Uncleest of Mikes and the Greasiest of Meatballs, and indeed myself, I thank all of you out there for downloading, streaming, and subscribing, for sending in your questions. We get them. Don't worry. We'll try to filter them out to as many shows as we can to keep the tide of questions answered here. So you'll get your questions answered. We'll join you back on the option block, of course, later this week. But in between, we got crypto coming up in about an hour tomorrow. We got all sorts of craziness popping off on our usual Tuesday Madness, Wednesday, Education Wednesday. So you got OPR, you got Options Boot Camp, and then Thursday, once again, for episode 2 of the Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.